Good evening, Columbus. Welcome to tonight's Columbus Connects for Leadership Lecture Series for Virtual Town Hall. We will begin tonight, like we do everything at Columbus, with a prayer. And to lead us in prayer is Brother Michael Brady. Brother.
Good evening, everyone. Tonight's prayer has been requested by Brother Patrick McNamara, the Provincial of the Marist Brothers in the United States. It's a novena that ends on Mother's Day. So the Marist Brothers in the States, as well as Marist youth and Marist young adults, as well as our faculties, have been saying this prayer for the past few days. And so I would like for us to begin. In the name of the Father, and the Son, and the Holy Spirit, amen. For all who have contracted coronavirus, we pray for care and healing. For those who are particularly vulnerable, we pray for safety and protection. For caregivers and healthcare professionals, we pray for courage and stamina. For all who experience anxiety and uncertainty, we pray for peace of mind and spirit. For affected families who are facing difficult decisions between food on the table or public safety, we pray for shared solidarity with our brothers and sisters around the world. Father, during this time, grant peace, grant comfort, grant healing. We entrust these prayers to the intercession of our good Mother, and so we pray. Hail Mary, full of grace, the Lord is with you. Blessed are you among women, and blessed is the fruit of your womb, Jesus. Holy Mary, Mother of God, pray for us sinners, now and at the hour of our death. Amen. Saint Martin Champagne, pray for us. Mary, a good Mother, pray for us. And let us remember to pray for each other. In the name of the Father, the Son, and the Holy Spirit. Amen.
Thank you, Brother Michael. Good evening, Explorer Nation. On behalf of the faculty, staff, and students of Christopher Columbus High School, welcome to our second virtual town hall meeting. Well, I'd much prefer that we were together on campus. I'm glad that so many of you are able to join us today. My thanks to Melissa, Flash, Christina, Barbara, and Omar for working so hard to make tonight's town hall happen. My thanks to our wonderful alumni panelists, Marcus, Lou, Adrian, Carlos, and Danny. I know how busy you are, and you are showing the Columbus Brotherhood spirit by taking this time today. We're all proud. We are all members, blessed to be members of the strong and powerful Columbus Brotherhood. And this is a time for us to stand together and support each other in prayer and in deed. As a Marist school, one of our 5 defining pillars is a sense of family spirit. To that end, if you hear of a Columbus family struggling during these difficult times, I know we'll all want to help. I've been serving as a point of contact to coordinate any assistance. So if you hear of any issues, please contact me. God bless you and your loved ones. God bless Christopher Columbus High School, and God bless America. I look forward to that day in the not too distant future when we're all back together on campus. I'd now like to turn it over to Flash and to our panelists. Take care, Explorer Nation, and adelante.
Thank you, Tom. My name is Alfonso Flash Fernandez, and I will be your moderator for tonight. I am an alumnus from the great class of 1984. Joining us tonight are 5 alumni who are highly successful and recognized within their financial and human resource fields. This panel includes the CEO of a multi-billion-dollar firm, the president of a local bank that has led the effort providing Paycheck protection program assistance to small businesses, the CEO of a professional employer organization that was co-founded by one of the pioneers in the industry, a partner in one of the largest homegrown accounting and professional services firms in Florida, and a wealth management expert with over 20 years of financial industry experience. There's one common bond these panelists all share, other than being success stories in their own respective fields. They are all explorers. So let's begin. First, let me introduce our panel. We have Carlos Saladrigas from the class of 1990. He's a co-founder, president, and CEO of the Regis HR Group. Then we have Adrian Alfonso from the class of 1998. He's a CPA and partner at Kaufman and Rossin with a specialty in taxes. Then we have Danny Brea from the class of 1995, a certified financial planner with 20 years experience in wealth management. And then we have Luis Aguilera, the elder statesman in the group from the class of 1977, who is the president and CEO of U.S. Century Bank. And then we had the CEO of Camping World, host and star of the CNBC TV show The Prophet, Marcus Lemonis, from the class of 1991. Tonight, we will be covering the financial concerns of both small businesses and personal finances. The first part will be dedicated to small business owners. You will be able to ask questions to all the members of our panel. When asking your questions, please include your name. And if you are an alumnus of Columbus, please also include your graduation year. If you want your question answered by a particular panel member, please let us know. You can type your question by submitting it on the comment section on the bottom right of the Columbus YouTube page. So now let's begin. The first question is going to go to Lou de Aguilera. Lou, what is the difference between the CARES Act and the PPP?
Oh, Flash, it's good to be here. I appreciate you saying that I'm the old man in the group. CARES Act versus the PPP. The CARES Act really is an umbrella acronym that the government gives. It's the Corona Aid, Relief, and Economic Securities Act. The government loves to give acronyms. And in late March, there was a package that was for $2.2 trillion. The PPP, which is the Paycheck Protection Program, is a subset of that. If you break down the $2 billion that were approved by Congress, you have $560 billion that went to individuals, the individual checks that are going out, $500 billion that went to big corporations, $377 billion to small businesses, $340 billion to state and local governments, $153 billion to public health. And since that was approved, the numbers have even grown because there's been a second tranche that has been approved. So under the CARES Act, this Paycheck Protection Program basically prioritizes millions to working Americans, small businesses, eligible nonprofits, veteran organizations, tribal businesses, self-employed people, and independent contractors. What it does is that it provides small businesses with funds to pay up to 8 weeks of payroll costs, including benefits. And of that money, because there's a calculation that they do in order to get you the funds, a portion of it can cover mortgage, rent, and utilities. The interesting thing about this is that although it's called a loan, it really acts as a grant because it is forgivable. So it is forgivable if 75% of the money that is given is used to maintain payroll activities. The loan payments can also be deferred for 6 months if a portion of it is not forgiven. There's no collateral, there's no personal guarantees, and the government and lenders are not going to charge to do it. Something like this has never happened before. It's been a tremendous amount of work for myself and my team. We've been just really pounding out the hours. There's $659 billion to the PPP program that has been allocated. In the first round, just so you can understand the demand for it, 350 billion basically was approved in a period of 6 days. It ran out. There was a second round for 310 billion. Of that, I think already since last night, 190 billion were taken. So there's still, I would imagine by the end of the day today, somewhere between 90 to 100 billion to go. In the first round, a lot of the large banks really stepped up to the plate and kind of glommed all the activity. So in the second round, the government allocated 60 billion for smaller banks, like mine. My bank is 1.3, actually 1.4 billion in assets. We have locally done, very proudly to say, we've done 100 million in these small business loans. We have supported Marcus 1,100 local businesses and supported 17,000 local jobs. So we're very proud of that.
Okay, thanks, Lou. The next question will go to Marcus, Lou, and to Carlos, but we'll start off with Marcus. Marcus, but what industry besides the restaurant businesses have been affected the most by the coronavirus?
Well, there's a couple of industries. First of all, I think everybody's industry has been affected in the short term. The reality is what's going to actually last longer than the short term. I worry about the gym business. I worry about the salon spa business. I worry about the cruise industry, the hotel industry. And so anything where there's a population of people in close proximity or your engagement with the individual you're doing business with is in tight quarters. I don't know how long it's going to take, and I don't know if we're going to see a new world here, but it definitely is challenging for those industries.
Yeah, I'll jump in here. Thank you for having me. In our business, we've seen definitely the restaurant hotel industry has definitely taken the biggest hit, no doubt. But we've seen it across the board. Everything from doctors' offices, mostly elective surgery type doctors' offices, architecture firms, golf courses. We've seen it really across the board hit just about everybody. Real estate firms, again, obviously the real estate hotel industry have taken a hit. Hopefully, as these companies have, start receiving the PPP fund, we're hoping to see some hiring coming back. Kind of like Marcus stated, I just don't know. We just don't know what the future looks like. The PPP is really 8 weeks, and what happens after those 8 weeks? A restaurant coming back at 25, 50% capacity, can they really maintain, the rent, the mortgage, the salaries, the people? It was a scary time before the PPP. I think the PPP has given us a little bit of a break, in the meantime. And then really, like Marcus said, what does the future hold? And that to me right now is really, what we're trying to figure out. How is that comeback going to look like? And I think it's going to be slow.
And one thing that I want to just clarify, and I know Lou gave us a spectacular outline of how the PPP money works, but as a business person, not as a banker, so Lou may get mad at me, I really want people to manage this cash as if it's not a loan and it's not a grant, as if it's the last dollar you're ever going to get. And I think that's maybe the most important thing. And if you go in understanding that it's the last dollar that you may ever get, and you don't do the things that are required to get it forgiven or get it reduced, it's okay because it's still pretty cheap money. I'd hate to have you bring everybody back, have your business be open 25%, you burn through the money, and then it lasts longer than you think, and there is not going to be any more money. And so I think whoever got any money from this, whether it's $1,000 or $1 million, you have to treat it as if it's going to be the last dollar you're ever going to see.
All right. The next question will go to Lou and Adrian. How does a small business apply for the PPP, and what is the process?
Thank you, Flash. I'll start off, initially when the PPP first came out, late March, early April, when people were hearing about the PPP, there was a lot of uncertainty as to the process related to PPP, as to what payroll cost was under the PPP. Some people initially thought independent contractors were eligible for purposes of calculating the PPP. So there was a lot of uncertainty with very little guidance from the SBA initially as to what exactly the calculation looked like. So that's how CPAs really got involved in the beginning and kind of reading through all the literature that was out there and coming up with what we thought was the best way of interpreting what we had. At that point, we had to tell most of our clients, go to your local bank, be it a local bank or a large bank, and they're the ones processing these loans. So you have to go to your community bank or to the bank you work with, because they're the ones that know you best, and they're the ones that can get this application process. And like Lou said, I think the banks did a great job in getting a lot of these applications through quickly. And I'll pass it on to Lou now, because they're really the ones that carried it from there, and they're really the ones that made this happen for a lot of small businesses. So Lou, if you want to talk about the process that you guys did.
All right, so to make it really quick, go to the SBA.gov website. You can get the application for the Triple P. You have to have payroll expense verification documents, such as the IRS 940, 941 form. You have to do a payroll summary. You have to certify that all the employees live in the US, and you have to have the 2019 corporate financial or trailing 12-month profit and loss. If you're an independent contractor or a sole proprietor, you need to provide a 1099 and apply directly to the bank. It's not a complicated thing. The application is pretty simple. So that's basically it. But if you go to the website, it's clearly detailed there.
If you're an explorer, do you get to the front of the line or do you have to wait in the back?
Well, we've made exceptions, Marcus.
Good answer.
Actually, one of the beauties of community banks, and we've gotten so much new business that it's up to us to now develop. There's been so many people that have applied to very large banks, and they had no idea what was happening. They were just sitting there. So community banks have made it happen.
In our experience with our clients, definitely the community banks were the key. The ones that had the larger banks really struggled at the beginning.
Yep.
And Lou, like, can you repeat that website again, or where they were going to get the forms?
www.sba.gov.
SBA.gov. Thank you. Next question, Adrian. Is it too late to apply for the PPP?
No, it's not. I mean, like Lou said, when he opened up, there's still a little over $100 billion left in the second round of PPP money. So it's definitely not too late. If you haven't started the process, I urge you, again, to reach out to your banker, whoever the relationship is with, and get the process started. The application is not a difficult application to complete. It's 2 pages, I believe, and the documentation to support it, it's not that difficult. If you haven't done it, there's still time. I would assume that the 100 billion that's left will probably run out by next week is my gut. But it's definitely not too late to apply.
Okay. Next question goes to Carlos and Lou. What percentage of the small businesses that applied may receive funding from the PPP? Lou, if you can start with that one.
Well, I'll tell you, because I'm gonna crow about this one. 92% of all the applicants that came through US Entry Bank were approved. That's a pretty damn good pull-through ratio. I heard at a national level it was more in the 60s. I can't confirm that, but I can confirm what we've done. So 62% of our applicants in the first round were approved. And one of the things that's happened is that people get frustrated with the large banks. They come to the smaller community banks, and then we process them and they give them, and we find out that they already have what's called an E-Tran number, which means that once you get that number, the money is already locked in for you, whether it's funded, whether it takes you another week or two to get it, but the money is locked in. A lot of times the larger banks are doing the job, but they're not communicating it to the businessman or businesswoman, and they get worried, and then they go to another bank. So we've had a share of those happen. The good thing is that, they're going to get the money, but we've been really fantastic. Our team has been working 3.5, almost 4 weeks now, to past midnight, day after day, including weekends and Holy Week.
Wow.
As far as we're concerned, we about 52% of our clients received the PPP that we're aware of. Keep in mind that even though we've tried to reach out to all the clients that we know applied for it, we're not always able to, or not always told. But as of right now, we believe that 52% of our clients received the PPP funding, and we know that some are starting in the round. So we've also been very happy with the success. Obviously, we'd like to see more clients get it, but a lot of clients, that lost out in the first round, and we're hoping to get it in the second round. By the way, Lou, one of the most frustrating parts of when we were getting our PPP loan was them, the bank telling us you have the loan, you have a loan number, you've been approved, but not seeing it for a week or so. It was tough to go through that week. Say, yeah, we're approved, okay, but show me the money. But you're right. It was once they told you have the money, it was guaranteed pretty much. So it was nice to get it finally, but it was tough waiting for it.
Yeah. Wow. Well, but we'll stay with Carlos and with Lou. Next question. What role did your company play in assisting your clients through the process of applying to PPP? How did you guys help?
Let me start off on my end, since I probably started the process and you ended it. But my company, I think, played several roles. Sometimes I felt like we played, and no disrespect to my CPA and lawyer friends, sometimes I think we played CPAs, lawyers, and payroll and HR, which is really our main function. But really, when our bread and butter is what we are an HR company, we're a payroll company. So at the very beginning, our role was really helping our clients figure out what's going on, what's happening, what kind of policies and procedures they needed to implement, how to send people home, what policies and procedures they needed to send people home, etc. It was a very tough time for our HR people. Then really came the layoff component side of it, which is really the hardest part I think we've been through, because again, we serve as our clients' HR company. So, we then began, we served the role, our HR people, and many nights I got in calls with them and, heard them and, almost in tears of how many layoffs they had to do and the sad stories of people, being able to, where's my next paycheck going to come from? How, what about my health benefits? Being concerned that they were going to get the virus and then not have health benefits. So, I think we played, very kind of a counselor position or a counselor role. And then after that came the PPP loan funding, which really where payroll kicked in, which is all the payroll reports and all the payroll documentation that the clients needed in order to apply for the PPP. Very similar to Lou, and I'm sure a lot, and Adrian here on the, it was a lot of late nights for my team putting together these reports, and everybody wanted to come first. Everybody wanted those reports yesterday. Even before even knowing exactly what reports were needed, people were asking for payroll reports. So, I think we played, several different roles throughout this process and continue to play those roles. And, I'm hoping that we met the challenge. But again, it's just, I think we're in the middle of it. The next wave is going to come for the forgiveness component. What's going to be required for the forgiveness. And we had a webinar today on that for our clients, and there's still not a lot of clarity and not a lot of guidance on what is the forgiveness and what's going to be required for forgiveness. So, that's going to be the next big wave that I think us, Adrian, Lou, we're all going to go through, is how do I get that loan forgiven? So we'll see what happens.
Lou?
We have to put things in perspective. The unemployment claims through April, there's 30 million unemployed Americans. That's 17% of the working population. So we've taken it unbelievably seriously. The way I see it, bankers are the financial first responders of this crisis. I know all of them working incredible hours to support our community and our clients and our brothers and our friends. So what's happening, we give value added by being there, by guiding people through it. It's a tough time, but always been with them, and this is where you step up to the plate and make it happen.
Lou, I know that Danny and Omar know this as well, but keep in mind when we talk about 30 million people being unemployed, we have to remember that state and local governments essentially shut businesses down and advocated that their employees go file unemployment because it was so lucrative. And so we have to really take the number of 30 million unemployed in the context of when businesses start to open up again and people are furloughed, and whether it's at a bank or at an investment firm or at Christopher Columbus, that number is slightly exaggerated right now. It could be more than slightly exaggerated. And I think it's going to take us 90 to 120 days to really understand the massive repercussions that could exist in the long term. And the long term feels like these days, a month, 2 months, 6 months, 8 months. Where we're at right now, the market's still in a bit of a shock. And through July 31st, these unemployment checks they're pretty rich. In fact, in some of the businesses that I have, and I know you guys have, we're asking people to come back and they're saying, no, I'm good. I'm good. And the reality of it is that that's not okay. So it's exaggerating the unemployment number, which is why I believe the market isn't responding as negatively as you would anticipate. The real question is, when businesses open back up again, they're going to have learned how to do more with less. And so when you furloughed 10 people, how many of those 10 people are actually going to come back? I would love to if we could just hear from Danny on what he's hearing in the marketplace on this issue. If we could, Flash.
Yeah, that's fine. That's fine. Danny?
Yeah, I would agree with Marcus that, that number is exaggerated. A lot of that 30 million unemployed will get back to work a lot quicker than some others. I think the bigger question is, how are they going to go back to work and in what context? How many people are going to be back in the office? How many people are going to be working from home now? I'm also curious to see what this does with commercial real estate. You know, what's going to be the footprint for businesses now? Are they going to need more office space or less as a regard to this? So we're definitely going to see a much different world as we come out of this. But some numbers are exaggerated, but some numbers are exaggerated in a bad way too. Because if we look at earnings for corporations, we're looking at the first quarter, which included January and February, where people were still out spending money. So I'm a little concerned about what second quarter earnings numbers are going to look like when companies have really gone through 2 or 3 months of no earnings. So that could be another exaggerated number that I'm a little concerned about.
Thanks, Danny. And for the next question, Marcus, but we'll go to you and then also to you, Lou. What advice can you give to people applying for a PPP loan when dealing with a bank?
I'm the wrong person to ask because I'd probably like to beat Lou with the stick. But it's probably have patience and in all sincerity, understand that there was no preferential treatment. All kidding aside, there really wasn't a lot of preferential treatment in the process. People who applied in the first 6 minutes, there were millions of applications within the first 5 minutes, and people really can't get through their mind. I applied within the first 6, 10, 8 minutes, and I didn't get money the first time. What's going to happen? I think you got to have patience. And I think the second thing is, and I've been a big advocate of this, the money was intended for a specific audience. And we saw a lot of people enter that realm and grab some of those early dollars that they shouldn't have. If you're applying, I would call Lou tomorrow if you haven't applied already, but if you're applying, you got to have patience.
Yep.
Lou?
It's very simple. Have your paperwork organized and ready. A lot of people initially gave incomplete packages. They were kind of nervous, scared, not paying attention to what they had to submit. And the packages were all over the place. And our bankers had to be calling them and guiding them through it, which we did. It's what we're there to do. But if you want things to move quickly, read what the application requires. The documentation is not complicated. Submit it completely. Hopefully, my recommendation, deal with a community bank. A community bank's always going to be able to answer the question and hopefully process things quickly. It's no mystery to doing these things. Just do it right the first time, and I think it should flow through. I am glad that the second time around they've given, the $60 billion bucket to community banks, and they're defined as banks under 10 billion in assets. But within that 60 billion, they also gave 30 billion to banks that are considered minority deposit institutions in order to be able to get to that small businessman. And it just so happens that US Century Bank is an MDI. It is a minority deposit institution. The largest loan that we did was $6 million. And the smallest loan that we did was a little over $1,000. Guys, wealth is relative. I bet you to that person who applied for the $1,000 to pay their employees, it was just as important and they were just as nervous as the company who applied for the $6 million. I know that a lot of big banks weren't looking at those small loans, but you know what? We do.
Thanks, Lou. We have our first question from a viewer, and Lou, it goes to you. It's from Luis Santos, and he asks, Lou, if the pandemic continues, do you think a second or third round of PPP loans will be given? Even if you already applied, like Marcus said, it's only 8 weeks.
Right. I know what I know, and I don't know what I don't know. I did hear very early on when they were approving the first round that there would be a second. The other day I heard Pelosi talk that there would be a third and that they were going to swing big. It was going to be another $1 trillion kind of a thing. This easy money sounds really good, guys, but remember, we're going to pay for it at the end with taxes. It's going to happen. How the hell do we just can't keep on printing money. So will there be another round? I want to be more optimistic and hope that there's going to be a medical cure. I want to be more optimistic and think that people are going to be responsible and not have, all the Cubans on their boats on the beach. And I say that as a Cuban with friends with boats on the beach. but we've got to be responsible. You just can't go out there and just party all the time. This is a very infectious disease, and we've got to be very respectful of it and very disciplined. Will there be a third round? Honestly, I hope there's not, because if there's not, that means that the curve is flattening, that the economy is getting going. But if there is, God help us all, we'll deal with it.
Well, here's the point that I think people are forgetting. So our gross GDP for the US economy is $16 trillion a year. And so if you take 1/12 of that out of the equation, when you talk about putting financial stimulus into the market, it becomes a little cumbersome and it becomes a little worrisome when you're putting in more than 1/12 or 2/12 or 3/12, which is essentially the eradication of revenue in those different months. When you're putting more than that into the marketplace, you really have to ask yourself if you're just creating a false market. And I think Danny made a really good point in addressing somebody that nobody's talking about, which is the commercial market. And so part of the backdoor process of putting money through loose banks and through a bunch of other banks wasn't just for paychecks. And we should all stop acting like that's what it was for. It was a beautiful window dressing around it. But when they start including things like rent, it's the government's backdoor way of trying to prop up or at least sustain the commercial market. Because in most cases, those commercial properties have commercial loans that go along with them. And we all know that 2008 and 2009 was a derivative largely of the residential and the commercial real estate market collapsing, which then triggered the banking collapse. And so I think they probably went at this a different way and said, okay, we're eradicating 1 or 2 months of at least a large portion of the GDP. How do we flush that money into the market? And how do we not get crucified for doing it all in the corporate bailout mentality? Well, we'll go to the small businesses and we'll flush money through them. And in most cases, some of them are getting more money than they ever would have had in their bank account and they ever would get in the history. $29 billion is what the SBA traditionally processes on an annual basis. 29 billion. We're up to 600 billion. So for most small businesses, and people will shoot me when I say this, the PPP loan was like Marcel and Champagne coming and delivering you lunch. It was a gift, and it was a chance to restart things. And so the thing that we should all be worried about as investors, as educators, as bankers, is what's the domino effect that is unrelated to businesses closing? What are the things that we're not thinking about? Where's the collateral damage going to lie? I don't believe it's in the unemployment. I believe it's going to be in the sustaining loan market. And what we've held up so far is a solid banking environment, and Lou knows that. If the banking environment gets even a little pressured, when delinquencies start to kick in and foreclosures or repossessions start to kick in, that's gonna really challenge the underlying health of the credit market. And if the underlying health of the credit market gets suppressed, it's gonna be a problem.
I agree with Marcus. I think the next 90 to 120 days are going to be crucial when you're going to start looking at what is the real trend on delinquencies, because in March, 96, 98% of the people that I've spoken to that are property owners collected their rents. It's now going forward, April, May, June, July, where we're going to see the delinquencies, and that is going to affect a lot of other things.
And some business owners are just going to take a license not to pay to see what they can get away with.
Yep.
And that's really part of the challenge, is that there's going to be a bit of chicken or who's going to blink first. And that's going to be a big problem for the commercial real estate market.
Wow. That's a good way to put it. That they're going to be playing chicken, see who's going to blink first. That's a good way to put it. All right.
Yeah.
All right. Now, but the next question goes to Adrian and to Marcus. The first part, it's a two-part question. First part will go to Adrian. Adrian, the question is, what are the major tax benefits under the CARES Act?
Thank you, Flash. That's a great question. I know obviously PPP has gotten 99% of the attention under the CARES Act, but the CARES Act is 800 plus page bill that passed, and it has a lot of good tax benefits and reliefs for taxpayers, both small and large, that are very advantageous for anyone who could go back and amend returns. I'm going to go over four of the major ones that came into play really back in 2017 when what's known as the Trump tax cut passed back in December of 2017. There's a few things in there that really wasn't too beneficial to taxpayers, but with the CARES Act, they kind of fixed some of these things. The first one is qualified improvement property. And these are any improvements to any interior portion of a non-residential building, so it's got to be a commercial building. You're actually able now to depreciate it over 15 years. Prior to that, it was 39 years. Now you can depreciate over 15 years. It's expensive. But better than that, because it's a 15-year property, they allow you to deduct it in year one completely under bonus depreciation. So theoretically speaking, if you own an office or you rent a commercial office space out to businesses and you make improvements that qualify, and it could be a $500,000 improvement, $1 million improvement, instead of expensing that over 15 years or how it used to be 39 years, you would be able to deduct that entirely in year one. Another one of the major things that changed was an interest expense limitation. Part of what happened with the Tax Cuts and Jobs Acts of 2017, they implemented this interest limitation. So some businesses were actually had their interest expense limited based on a 30% of their adjusted taxable income. And I'm not going to get into what that calculation is. But what the CARES Act did is they increased that percentage up to 50% for the 2019 and 2020 taxes. One of the other benefits is net operating losses. If you're a pass-through entity, right? A lot of businesses here in the United States, they're what we call pass-through entities. They're S-corps or partnerships where the entity itself doesn't pay any tax. Tax is paid at the level. So these NOLs, prior to the CARES Act and after December 31st, 2017, you couldn't carry any of these losses back to prior years. You can only carry the losses forward indefinitely. And you were limited to 80% of your total income of what you can offset income. What the CARES Act did said, okay, your losses in 2018, 19, and 20, we're allowing you to carry them back 5 years. So theoretically speaking, if your business did not do well this year in 2019, or even in 2018, it gives you the ability to take that loss back to 2013 or 2014, where you probably paid at a higher tax rate than what the tax rates are now, and you can amend your return or request a refund, and they're actually going to be able to, you're going to be able to offset that loss that's generated in 18, 19 in a prior year. So that's a huge benefit that if you use it with the qualified improvement property and the interest limitation rules, there's a lot of potential benefits here for taxpayers, both large and small. One of the other ones that came with the Tax Cuts and Jobs Act was the excess business loss limitation. If you had a business and you had a loss for whatever reason, it could be depreciation, whatever the case might be, you were limited to taking $500,000 loss. So even if you had a $1 million loss, you can only take up to $500,000. For 2018, 19, and 20, that's been repealed. If you have $1 million to $2 million loss, you can in theory take it back 5 years and get some money back from taxes you paid 5 years ago. So that's huge. On the individual side, I like to call this one the Brother Kevin favorite tax relief for taxpayers. If you don't itemize and you are standard deduction, meaning you can deduct charitable contributions, well, now for 2020, you can deduct up to $300 of your charitable contributions. If you itemize, it was limited to 60% of your income. So now you can deduct up to 100% of your charitable contribution and wipe out your entire 2020 income. So Marcus, if you want to wipe out your income, Brother Kevin will.
Look, here's the thing. I don't know when they taught you all that in Columbus, but it must have been after we graduated. The only thing that they taught us was the last portion describing how you can deduct your contribution. All the other stuff must have been class of 92. I don't know if Danny, if you got any of that. We have no idea what you said, but you sounded really smart and you look good. So we'll just go with that.
Thank you, Marcus. Thank you. So those are the major tax benefits that really came out of the CARES Act from a business perspective. From a retirement perspective, you can take a distribution from your retirement account and not pay the 10% penalty if you're going to use it for COVID-19 related expenses. And you can also borrow up to $100,000 of your retirement account, up from $50,000. So there's a lot more, but those are the main highlights of the CARES Act as far as it relates to the tax relief.
Marcus, the second part is to you. How do these tax benefits affect a small business owner?
I don't think there's a small business owner in America that's thinking about their taxes. I think they're thinking about how they're going to pay their bills and if they're going to be able to keep their doors open. And, you know, this isn't an indictment. It's probably more of just an honest statement. Most small businesses in America are pretty unsophisticated. They do they do their books on QuickBooks, and they have a local accountant, or they do it online. Those levels of complexity probably apply more towards medium or large businesses, or as Lou said, apparently Cubans in Miami who want to have a nice boat. But for the most part, small businesses aren't thinking about it. I don't know if Danny, if you have any thoughts on that.
Yeah, I think you're spot on, Marcus. I think, especially locally here in South Florida, most people know their business and that's about it. They know how to manufacture widgets and how to sell them better than anybody. But when it comes to anything outside of that, there's really not a whole lot of sophistication. So, and also they're also not thinking about taxes because they're thinking more about how they're going to meet payroll and how they're going to keep their staff with their jobs. But when the light sheds on all this, hopefully there's a good tax advisor there to tell them what the benefits are.
Adrian, are you for hire? What's up? Are you for hire?
I'm happily employed at Kaufman and Rossin, but if you're looking for a good CPA, you can come to us.
Okay, great.
I do want to say, I mean, we do represent a lot of small businesses, and I think small businesses are looking at they're not concentrating on it right now because a lot of them are just concentrating on PPP and what's coming down the road, which is forgiveness. But I do think there's an opportunity for some small businesses to be able to use some of these tax benefits to get money in now that they can use to run their businesses. So I highly encourage any small businesses to really look at their situation and see if any of these benefits might be able to help them out, because they could get money now that can help them run their business.
One thing that we saw, there's a component of the PPP which allows you to defer the Social Security portion of the employer portion of Social Security. We did a webinar on it. We announced it to our clients, and amazingly so, only 39 clients took advantage of it. To me, that's a no-brainer. It was a no-brainer. So to Marcus's point a little bit, small businesses are just focusing on the big PPP program, really not focused so much on taxes. Obviously as time goes on, that may change, but that was a component for us that really surprised us.
Yeah.
But we have more questions from the audience. The next one is more of a comment, and Lou, it goes towards you from JB Aleman.
Uh-oh.
To make a comment to you and the U.S. Century Bank. They truly focused on the small businesses and a little edge to the explorers. And I want to commend them on being our frontline workers.
You better not have processed any
That's a
Belen
commercial.
loans. You better not have put any Belen loans in your portfolio. We're going to be auditing that.
Thank you, JB. Appreciate that. Appreciate the shout out.
Next one is a question.
Commercial over?
What was that?
I said, is the commercial over?
Don't worry, Carlos. We're going to give you a commercial. Don't worry. Don't worry.
I'll take it, Marcus. I'll take it.
The next question, Marcus, goes for you, and it's from Kenneth Cota from the class of 1990. He says, "Hi, Marcus. How should small businesses, kind of to the ones that you feature on the profit, think about showing up balance sheets outside of the PPP in the private markets?"
One more time, Flash. How are they doing? What's the question again?
Okay, the question is, how should small businesses, kind of like the ones that you feature on the profit, think about shoring up balance sheets outside of PPP in the private markets?
Well, I think first and foremost, we probably have to get the small business owners up to speed on what a balance sheet is. And I know that most of the ones on the phone today know what it is, but most small businesses don't know what a balance sheet is. And essentially, it's understanding what your assets are, that's what you have, and what your liabilities are, what you owe other people. And hopefully the left side is better than the right side. But at the end of the day, there's really only a couple of ways to solve cleaning up or shoring up your balance sheet. You're either going to convert debt into equity, you're going to raise capital from the outside, right? You're going to raise capital from the outside, or you yourself are going to put money in. If you go and borrow money, it's important for people to understand your balance sheet doesn't actually improve when you borrow money. because you put the deposit in Lou's account and you have the liability to Lou's bank. And so that's sort of a net. I think if small business owners want to shore up their balance sheet, they need to find additional sources of capital, paid in capital, not additional sources of debt, to infuse it into their business. And the biggest concern that I have right now is that there's some percentage of businesses prior to COVID that probably shouldn't have been in business or weren't going to make it through a normal time. If you are one of those businesses, this is the moment where it's time to pivot and reinvent yourself, because going to Lou and taking a bunch of money, even though there's no personal guarantee, at least not one today, the rules change by the day. And I promise you that people are going to start looking into fraud and a bunch of other things. So if you are a business owner today and you don't have a viable business, please don't call Lou unless you have a better plan. If you have a viable business, but you don't want to borrow money or get a grant, you got to start thinking about bringing a partner into your business. And this idea that owning your business is fantastic if you own 100% of it. Look, I have a public company. I'm the largest shareholder. I control the company, but I'm not the only shareholder. And I learned that it's okay to bring partners in. They have different ideas. They have different experience. They have different resources. Maybe you bring a partner in that knows Danny, and somebody in that brings Carlos, and somebody in that knows Lou, and they're going to help fix your business. So if you're trying to shore up your balance sheet as an owner, I think exploring the opportunity to bring in a partner, maybe a fellow explorer, that may be the first place to go.
Okay. Next question, Lou, I think I'll go to you from Arnaldo Arguello. If the bank that provided my business the loan didn't give me the full loan, would it be a good idea to reach out to them to see if I can get what was missing, or should I just let it go?
Good question.
You want me to repeat it, Lou?
I'm assuming here that we're not talking about a triple P loan. Look, banks right now are really looking hard and fast at how they're going to lend going forward. Because I really cannot think, and this is a discussion that I've been having with my management team, I can't think of a business that has not been impacted one way or another, by the coronavirus. Hotels, motels, restaurants are effectively shut down. Retail has been hit so hard, but then you keep on going. Gas stations, their volume has dropped because people aren't traveling. The airports are closed. Imagine all the businesses that supply them. So banks are taking a look at lending in its entirety, and they're probably being more conservative. So you might have applied for a loan and the bank is looking at a certain loan to value and a certain debt service coverage. But in this market, they're just pulling back because they're trying to help everybody. And right now, I think that it's a time that it's not only return on your investment, you're trying to preserve your capital and stay, viable to support everybody. So you're going to see banks, and they did it during the Great Recession, just be a lot more conservative right now.
Okay. Next question from the audience goes to Carlos. It's from Kenneth Goto. It says, "Hi, Carlos. Some feel that HR and payroll service companies would have been a better conduit for the PPP than the banking system because of your data on employees. Tell Lou why you think you should handle it."
Lou, did you hear that? I'm going to explain to you why I think we should have done this instead of you. Yeah, that's what's up, Mr. Cota? Good to hear from you. Look, I think we had a role to play, no doubt. I think we played that role very well. I don't think we had the same relationship with the SBA, the same way to transfer money that banks had. So I really do think that the roles were played right. I wish everything was done through us, of course. But at the end of the day, I think that from that process, it was handled right. It was your payroll company providing you with the reports, providing you with the data. There was other additional data you had to get either from your CPA or so forth, and then it had to go to somewhere or someone that can then put that money in your bank account. So, at least from my perspective, it was a very efficient way to make it happen. We just couldn't have put the money in the accounts or move or have the relationships with the government and so forth, like the banks have. So I appreciate it, Mr. Cotto, but I really do think in this case it was done the right way.
Okay. The next question we have, we got a lot of questions from the audience. The next question from Kenny Rios, class of 1989. I'll open up to anybody who wants to answer this one. The certification date was moved from May 7th to May 14 a couple of days ago. Our company's fearing they won't be certified and are planning to return the funds received.
I'll take this one, Flash, and Lou, I'm sure you want to jump in and give your thoughts on it. Ken, the partner of mine at Kaufman, so I figured I'll go first. So yes, the original date, about a week and a half ago or so, under the SBA Q&A, one of the questions, I believe it's question 31, came out, in which it talked about the necessity of a company owned by a large public company needing the funds for one of the certifications in the SBA application. There's been other questions and answers after that. There was one on if private companies. And then last night or 2 nights ago, they moved that date from May 7th, which is today, to May 14th. My personal opinion, I think there's still a lot of guidance that's needed from the SBA as it relates to this. I don't think it's clear what they mean by a lot of the answer that they had for question number 31. What's sufficient liquidity? What is the economic situation of the business? So to me, there's still a lot of guidance pending. And I go back to a question in the SBNA Q&A, question 17, that came out way before all this, which it asked, if I filed or approved a loan application based on the version of the PPP interim final rules published on April 2nd, do I need to take any action based on updated guidance in these facts and questions? And the answer from the SBA was no. So I question whether or not a business applied early on April 3rd or April 4th or April 5th, whether they have to look at this new guidance that's out there, because if I go back to this question 17, it says I don't. I can rely on the guidance that was out there when I first applied. So to me, I think there's still a lot of guidance and still unanswered question as it relates to that, which is why they pushed it to the 14th. And I wouldn't be surprised if they push it further out if guidance doesn't come out between now and the 14th. That's my personal opinion. Lou, I'm not sure what you've seen. I'm sure I know some businesses that have returned the funds. Lou, I'm not sure if you want to touch up on that.
No, I was talking to a relatively large company out of state that approached me, and they were complaining about their bank. And I researched the company because it was introduced to me by a shareholder who knew these folks. And I couldn't understand why they were asking for the money and why their bank had just taken so long, because clearly they were a significant client. And my conversation with them is, look, be careful. This money is not supposed to be out there just to take it for the hell of it. There's going to be repercussions, and they thought about it overnight, and we were ready to go. And to their credit, they called me the next morning on a Saturday, and they said, we're not going to do it. We're going to wait for the Main Street programs that are coming out, and kudos to them. Adrian and I were speaking earlier today, and what's the number? Already 300 million have been paid back in the first month. How do you pay that number back? I think people are reassessing that if you have other sources of liquidity, you really shouldn't be dipping into this. And my concern, and I think it should be everybody, especially large companies who've got other sources of liquidity and credit, is that there's going to be a day where they're going to be auditing you, and you're going to have to explain why you took or needed the money. So caution.
Yeah, they're also going to be one of the things in the Q&A, to Lou's point. Any loan over $2 million is going to automatically be reviewed. The exact language is not audited. It's reviewed by the SBA. I'm not sure what that entails. Lou, I'm not sure if you've heard what that entails and how they're going to review the loan, but any loan over 2 million is going to be automatically reviewed, and any other loan they feel needs to be looked at. So it's definitely something to continue following. If you're a business that has the money and you think you have liquidity, you have till the 14th to return it. But again, I think the SBA still needs to come out with further guidance on some of this stuff.
Absolutely.
In all fairness, I think, until they come up with some clarity, I think it makes it very difficult. We've had a couple clients that have returned it. But at the end of the day, I don't know how they're going to come after somebody without providing more clarity in this area. But it's definitely an area that's come up a lot on our end as well.
Not to mention, I mean, if you have a business that got funded early on and you're a few weeks into this and you retained employees because of, because the guidance that was out there when you first got the money, you're eligible for it. And it's not like you had a lot of liquidity and you kept employees on thinking that the money was going to be forgiven down the road, and they're changing the rules of the game as this goes on. I mean, I can foresee a lot of litigation related to this. So, which is why I think they moved the date, going back to the question, why they moved the date to the 14th. And I think we're going to be getting more guidance on that as it goes on. And I think as they clarify some of these things, you might see more businesses returning the money.
Thank you, Adrian. And I think that, and that's a good segue to our next question, which is from one of the viewers, Marcus, and I want to direct it towards you. It's from Nick Landera from the class of 2002. He goes, what advice would you give to a borrower to determine whether their loan is necessary in consideration of the safe harbor deadline, especially those that expect but haven't realized an impact?
I missed the middle part of that, Flash. Sorry, bud.
Right,
Something about safe harbor, I heard.
Yes, the safe harbor. Okay, let me repeat it again. They're asking for what advice would you give to someone asking for the money to determine whether their loan was necessary in consideration of the safe harbor deadline, specifically those that expect but haven't realized the impact.
Yeah, I'd like to hear from Lou on that, because as an underwriter and as a banker, his perspective is going to be far more valuable than mine.
Okay, Lou?
Flash, you were breaking up. I couldn't hear the middle too.
That's because your
Okay.
class is 77. That's why you can't hear it.
See, I'm not the only one that mentions it, Lou. All right, let me repeat it again. It's from Nick Landera. But what advice would you give to someone to determine whether the loan is necessary in consideration of the safe harbor deadline, specifically to those that expect but haven't realized an impact?
Look, I think every businessman knows if they need the money or not. I wouldn't be looking at safe harbor. Personally, I look at the moral aspect. There's other people that need the money. Can my business carry on? Can I pay my employees? If the answer is yes, then I move forward. This is a program to cover payroll for 8 weeks. That's what it really basically is. I think Marcus couldn't put it better. You've got to think that this is the last money you're going to get. Do you need it or not? Do you need it or not? Nobody knows that answer better than the entrepreneur, than the owner. If you need it, take it. You shouldn't have a problem. You shouldn't be worrying about safe harbor. This is not a loan to be taken because you're worried about safe harbor. This is a loan to take because you're worried about your employees and the overall viability of your business. If you check that box, you're not going to have a problem.
And I think the one challenge is, we all know what the public version of the PPP loan program was for. We know what the public facing version was. But at the end of the day, as I said earlier, this was the government's way of injecting capital into the marketplace. And we all know that every small business across America, maybe not every, most small businesses across America are going to use that money, and it becomes very fungible when it goes into their account. So if I had $5 in my account at 2 p.m. and I have $10 at 3 p.m., or another $5, I now have 10. It's very difficult to dissect and parse. Okay, I'm going to use this 30 cents for that and this 80 cents for this. It's just too fungible. And if everybody tries to outsmart the system, and instead of just running their business and doing what they need to, they're going to end up on the short end of the stick. I know it was intended singularly for payroll, benefits, and rent. I'm positive, because I know many of them, that there's small businesses using it for payables, for whatever it may be. because the money, when it goes into a pot, isn't dissected unless you're keeping it in a separate account, which I don't think anybody's telling their clients that they have to do. Correct, Lou?
No, we are. Actually, all these small businesses that come to the bank, we ask them to open an account and to put it there.
No,
You
but
know?
are you telling them that they can only use it for one thing?
No, we're telling them that they can use it for what the program calls for, but there's no monitoring. Marcus, you're absolutely right. You know, and a lot of times people are desperate that there's a payable that's needed, and they're going to go that route. You know,
If you are a and I know that Carlos knows this. If you're a restaurant and you are running a to-go business right now, and your Cisco vendor isn't paid, and they're telling you they're not going to deliver you food to be able to keep your lights on, you're going to use that money to pay your vendor. And there's nothing that anybody can convince me of. No government, no lawyer, no banker, nothing. The small business owner is saying, I have this money. My vendor's not going to deliver me unless I pay him, and I have no money other than this. He's going to use the money. Period. End of story.
I can tell you, some people are looking at this as, I know my loan's not going to be forgiven, but it's a low interest loan. The heck with it.
Yeah.
I'll pay what I got to pay. I'll figure it out later. And I'm paying my 1-2%, and it's free money at the end of the day. And I'm just thinking about how to survive. And that's what I think a lot of people are using that money for. It's not to pay their employees. It's not for the purposes that we all know the PPP was for. They're just doing it to keep their business alive, which, look, I mean, I get it. I mean, I don't know what we would do if they were in that position. Again, a lot of our clients are the restaurants, the hotels, and they're not going to come back quickly. They're not going to be able at 25% capacity to maintain their business. And right now, they're just thinking that.
Yeah, and on that note, keep in mind that the loan was based on the average payroll of 2019, and you got to pay it over an 8-week period. If you're a restaurant or one of these other businesses was been really affected, you don't have the amount of employees to use the loan to the 75% threshold that you have to meet. You're not going to meet it. So yeah, I mean, it's which I know there's people trying to get the SBA to change that 8-week rule. I don't think that's going to change. Hotels, restaurants, all those types of businesses, they probably cannot, in the 8 weeks they have from time of funding, for 8 weeks, use the money for payroll because they don't have the number of employees they had back in 2019.
And now a lot of employment pays more than they were making at the restaurant.
Yeah. All right, the next question goes to Lou and to Adrian. Do I need good credit to qualify for these loans?
Adrian, do you want to answer that? It's a short one.
I'll let the banker answer that. But no, I mean, for the PPP, my understanding is no. I don't think there's any credit requirements whatsoever for PPP.
None whatsoever. No, there's no credit bureaus pulled or anything like that.
All right, and I think we talked about this, Adrian. I think you talked about this earlier. So I'm going to put this question to you and to Carlos. Aside from the PPP, are there any other loan programs under the CARES Act? I know you mentioned some of them, Adrian.
There's the other popular one is the economic injury disaster loan. And when all this first started, you saw on the news, go to the SBA website. There's a $10,000 advance. Fill out the application, and the SBA is going to send you $10,000 overnight. 2 or 3 days. That never happened. They got so many applications that they limited to $1,000 per employee. So there is that loan, economic injury disaster loan. That's not like the PPP. It's not a grant loan. I believe they've in a few days there's been 40,000 of these loans for a total of $1 billion. I think you touched about it earlier. It's a Main Street lending program loan that's coming down the pipeline. I think these are for mid-sized businesses. These loans are going to range between $500,000 all the way up to $200 million. I believe local, the banks that are going to be loaning this money to retain a 5 to 15% stake in these loans. So I'm assuming that banks are going to be very careful as to who they're going to be loaning this money out to. And then the other thing I wanted to say, a lot of local cities, counties, municipalities, a lot of professional organizations, they have their own grants and loan programs. So if you've reached a dead end with the SBA or the PPP, look to your cities. I know City of Miami had a loan program not too long ago. It went in a few hours. I think Miami-Dade County is coming up with some loans and grants. So look to your local municipalities and see if they have anything that's available out there.
Okay. And the next one goes, Lou and Adrian again. Can self-employed workers and consultants apply for these loans?
Lou, you want me to take it, or you want me to? Yeah,
Lou?
self-employed individuals could also, I mean, specifically the PPP and the other loans, they could apply for it. The amount that they can get is based on their 2019 self-employment income. There are a lot of small self-employed individuals who don't pay self-employment tax because they make 50,000 of income and they wipe it out with $50,000 of expenses. Unfortunately, if that's the situation for a lot of small businesses or small self-employed individuals, they wouldn't be eligible for any of the PPP money. But they are eligible to apply for it if they had self-employed income in 2019.
Okay. But Marcus, the next one, and Lou also, this next question goes to both of you guys. What about the $10,000 emergency grant loan I've heard about? I think Lou, I think.
Yeah, I think Adrian just responded to that one. You know, that's the one that everybody thought was going to be real easy to get, and it's not going
on,
on.
right?
It is out there, the Economic Injury Disaster Loan Program. It's a direct application with the SBA. It does not go through banks. It is there for kind of a short-term bridge kind of a thing. I know it's there. I don't know of it. I mean, we're not handling it directly. But again, the SBA website, www.sba.gov, explains it. And everybody's welcome to apply directly to the SBA. That's all I really could say about that.
And Lou, can you apply for both the PPP and that emergency grant? Can you apply for both?
You can,
you have to choose?
as long as it's not for the same purpose. Can't double dip. Yeah.
You could
Right,
use your
the next
PPP money to pay off emergency, an EIDL loan. So
Correct. You can't pay it off.
Yeah, if you apply for both and you're going to use it for the same, things, payroll, rent, and all that, you could use the PPP money to pay off your economic injury disaster balance.
Right. We have another question from one of our viewers. We have Santiago Eljak from the class of 1991. Marcus is one of your classmates. He has a question for Lou. Lou, he says, but Fannie and Freddie and other banking institutions are granting for forbearances on the mortgage payments, especially given that tenants can withhold paying rent now without being evicted. Are you essentially and other local banks granting similar forbearances?
We're giving deferrals on a case-by-case basis. We look at the loan and the client and how they're impacted. And what we're doing is that we're offering, usually it's a deferral on the principal payment, depending on the asset class. If it is a hotel, a motel, a restaurant, the ones that have really been impacted, we're giving 120 days. It could go up to 180 days. Different asset classes have a shorter window. But yes, we're working with every client that needs help on a case-by-case basis, and we're doing deferrals very actively on a daily basis.
Okay. Next question goes to Marcus and Adrian. What should a small business do with the money that they receive from the PPP? What recommendations do you have for a small business owner?
I think I'm sorry to say, but I think it's kind of a tough question to answer until we understand what kind of business you're in, what your current balance sheet looks like, how many people you have, how long we think it's going to last. Is there a way for you to communicate back to them, Flash, or no?
No.
Okay.
No, that's not much. I mean,
I think the answer is, unfortunately, I think the answer is you really have to understand the kind of business that it is and what their current situation is. I think a banker would probably say to you, we know what it's meant to do. I'm going to continue to give the answer that you're going to do what it takes to have your business for you and your family survive and prosper while taking care of as many employees as you possibly can. But what I don't want people to do is use all the money just to pay people, and then they don't pay anything else and their business ends up closing anyway. And so I think there's this really fine line between taking care of your people, which is the most important thing, and protecting the business that you built for 1, 2, 5, 10, 20 years to support you and your family. That's my public and my private answer.
So if you receive PPP money and you're going to use it for the intent of it, right? And I agree with Marcus, you shouldn't just get it to use it for that and then be, 8 weeks after be sitting there with no money in your bank account. But if you do get the money and you can use it for payroll, rent, utilities, and interest, as Lou said, we are recommending to taxpayers and clients to put the money into a separate bank account so you can trace the money. We're telling people to create separate general ledger accounts to identify what you're using the PPP money for. We're telling clients to do forecasts, figure out what your anticipated 8 weeks worth of payroll is, rent, what are your expenses, how much PPP is going to be left over, and then document. I mean, if you're going to go back to the lender after 8 weeks, you got the loan from Lou, you're going back to Lou after 8 weeks, Lou's going to ask you for all the documentation possible because he needs to check off boxes to make sure that he has payroll documentation that he used it for payroll. If you have rent, it's got to be a lease agreement. It can't be a lease agreement you make up after February 15th. It has to be a lease that is in place February 15th. You can't go out and hire your wife and your kid and your grandparents to put them on the payroll. They shouldn't be doing those types of things if they're really not going to be doing anything for the business. So I think once you do all those things, I think you really need to document. So when you go for the process of getting it forgiven, you have everything in line and get as much of it, forgiven as possible.
I'm going to make a bold prediction as it relates to the forgiveness portion. So there have been at least a dozen iterations of how it's going to work, how it's going to get forgiven, what are the timeframes, and it's changed so many times. And in fact, some people receive loans in funding round one with different understandings than people that receive loans in funding round two. And at the end of the day, if you're a small business owner and you didn't ask to have your business shut down because of the virus, and you didn't ask to have people laid off, and you didn't ask for any of that, you're going to have a much saltier attitude if your loans don't get forgiven when you start finding out that somebody else's did. And I think the government is very exposed right now on a class action basis to the distribution of the money, to the enforcement of the money, to the forgiveness of the money, and to the application of the money. And so I'm going to make a prediction here that definitely won't come true, but I wouldn't be surprised if right before election time, everybody's got a great idea of how to forgive it all. Because how are you going to figure out how you're going to forgive one guy's loan on Tuesday and another guy's loan on Wednesday, and he got the money on a certain date, but his business wasn't allowed to be opened, and my governor wouldn't let me open, but his governor would let him open? How do you do it? What do you do?
Lou, do you have any insight as to what the process is going to be? I mean, I know the lenders have 60 days after the 8 weeks to get back to the, to your client and tell them that your loan was forgiven or not. I mean, is the SBA going to review these $2 million loan accounts in those 60 days? I mean, what's that process going to look like?
What about the $122,000 loan?
Yeah, we've seen how these guidances evolve. When the president signed on April 3rd, we actually waited a while because the interest rate changed. The things are changing. So we're waiting to get real clarity on the forgiveness portion. And I think what Marcus said is right. This thing is very politically charged, and there will be changes that are going to be politically driven. So we will see.
Lou, that was the best banker answer that I've ever heard in my entire life.
Thank you.
Adrian, this next question goes, are the expenses paid with the PPP money deductible?
No. If the amount of expenses paid with PPP loan money that's forgiven will not be deductible. The IRS came out with a notice last week. I believe it was notice 2020-32, and they clearly specified that if you use PPP money that's later forgiven, the income on that forgiveness is tax exempt, so you don't pick that up as income, but you don't get the benefit of the deduction. So I think initially a lot of people thought they would be able to take the deduction and have the income exempt, but the IRS came in and clearly said that that's not the case unless Congress changes that for whatever reason, which could happen. That's a recent notice from the IRS, and it would not surprise me if there's people calling their representatives and encouraging them to look into that and allow small businesses to take these deductions. But as of today, it's not deductible.
And there's a lot of people who read that ruling that have no idea what it means. Who are like, wait, I'm not going to be able to deduct my expenses. How do I parse them out? What QuickBooks account do I put them in? Do I just do them on the side so nobody sees them? It's like, there's so many versions and iterations of this that, because I have to get off the phone, Flash, but there's so many versions and iterations of this. My best advice is, if you've received a loan from a banker like Lou, from a bank like Lou, and you have your payroll with somebody like Carlos, and you understand that you have your documentation right, you still have to make the right decisions for your business to survive past the next 60 days. And whether anybody likes it or not, we have no idea what's going to happen, if there's going to be another round, if how much money is left in this round. Do they have more applications than we know? We have no idea what the forgiveness process is ultimately going to be like. I would just tell people, take care of your family, take care of your business, take care of your employees, take care of your customers, and we'll see where the dust settles. Don't try to spend all night figuring it out. Spend time trying to improve your business.
Marcus, thank you so much. You got to go, but everybody, you can follow Marcus at CNBC, the show The Profit. It's a very educational show. I know I use it to teach my kids about business because he does a very good job of explaining it.
I learned it from Brother Kevin. Just ask for the money. Ask for the money. Thanks, guys.
Thank you, Marcus. Good night, Marcus. All right. Just to remind people, you can still ask questions. We still have some questions here that I have to get to. We will still, now we're going to start the personal finance part of the event tonight. But you can still remember, go on the comment section on the bottom right on the page, on the Columbus YouTube page to get your questions in. We have another question here from the audience. Armando De Napoli from the class of 1992. And he asked, post 9/11 Congress established a terrorism risk insurance act. What are your thoughts on a similar mechanism for the future pandemic incidents? Anybody on the panel can take that one. Any thoughts?
Okay. Flash, I couldn't hear you on that one.
Okay, I'm sorry. From Armando De Napoli, class of 1992, post 9/11 Congress established a terrorism risk insurance act. What are your thoughts on a similar mechanism for the future for situations like this, like a pandemic incident? You think it's something that they should do? Like when we had after 9/11, they passed a terrorism act. You think they should do something like this for the future for any other viruses, which, probably could happen again in the future?
Look, I think that you always heard of the threat of a future pandemic, that seemed that it was going to be out there and it wasn't going to be in my lifetime. And if it wasn't going to touch the United States. This is a life-changing situation. This is something that is going to affect every aspect of life, just the way we're communicating here tonight. I don't think anybody even thought we were going to be doing this. So, what legislation is going to come out of it, I don't know. I can't answer this directly because I simply do not know. But this is changing. It has changed the world. It'll continue changing the world. I think there's going to be a lot of good that's going to come out of it. And in the business side, you're going to see emerging technologies, businesses, processes, et cetera. But I cannot specifically comment as to what the government's going to do and should they do it. Everything that's happening to a great degree is happening on the fly. And this entire PPP program was done on the fly. And it's amazing that everybody has put their shoulder into it to get it done. So, we will see.
The next question, we have a question from Doug Sawyer. To see whoever wants to take it, but what are the most important adjustments should small businesses make to survive until a vaccine is developed? What do you guys think will be the best thing that a small business should be doing at this time in order to survive? I guess we've talked about it before. just, try and survive each day until, until we can see something, because who knows when a vaccine is going to be developed. So that's a real hard question.
Every business is different, has different dynamics, has different needs. It's a difficult question to answer in the absolute. As Marcus said, you got to take care of yourself and your family first, and then kind of figure it out as you go along. I think preserving your liquidity, which is what everybody's trying to do, and that's from a banker's point of view. That's the part that is concerning me, because a lot of people that have the ability to pay are just basically sitting on their cash just to see what happens. So that's where you're going to start seeing the delinquencies. That's where you're going to start seeing, receivables erode. And again, it's a domino effect. Doug, I can't specifically say you should do this or you should do that. It's too personal to make a general statement from my perspective.
I personally think small businesses should think outside the box. I think this has been an opportunity for a lot of small businesses to embrace telecommuting, people that work from home, right? A lot of businesses before didn't like people working from home. And I think a lot of small businesses have realized that they could have people working from home. The reality is, with schools out and schools maybe being virtual next year, even though businesses are open, people are going to have to work from home. So I think there's going to be a lot of adjustments of businesses across all industries. And I think businesses just need to think outside the box and figure out how to do things better, more efficiently and effective. That's my take on it.
Yeah, and I also think, I'm sorry, Jim.
No, I was going to say, Lou, you're pretty happy. There was an older alum that just asked a question. I think Doug's a little bit older than you are.
I think he is.
I also think that, people need to really start thinking about, especially if you receive PPP funding, is what's the aftermath? What happens next? And really start projecting worst case scenarios. And I know in our business, we've said if our businesses or our clients come back at 10%, at 20%, at 30% capacity, what does that mean for our business? So really, playing with with the best forecast you can come up with, or the best scenarios of what you can come up with, what's going to happen after the PPP funding, and figuring out what you're going to need to survive that if worst case scenario hits, and work your way up from there. I think is very important as well.
This is also a good time for most businesses just to kind of step back and take an inventory of where they are, as a business themselves, right? Start to analyze, is my technology adequate? How do we handle this whole pandemic? Were we equipped to send our employees to work from home, or do we need to improve our technological infrastructure? Marcus mentioned earlier about the importance of pivoting, right? Maybe you need to change your business model a little bit to go through something like this again in the future. There's no better time to do that than right now.
Yeah. I think everything's going to change. Like after 9/11, look, just, now, like just the way that we travel changed, now you got to go through all the lines and everything has to be checked, where before 9/11, that didn't happen. There's going to be changes going forward that, things that we don't even think about now. I'm sure it's going to happen. All right. So now we're going to transition over to the personal finance part of the event. And the first question is going to go to Adrian. Adrian, but what is the new IRS deadline for both corporation and individuals filing their personal tax return?
All right. So if you were a pass-through entity, S Corp or partnership, your return was due March 15th. So you probably, or, if you haven't filed, you filed an extension that will get you to September 15th. Outside of that, any income tax return due or any tax payment due between April 1st and July 15th was automatically extended to July 15th. So as it stands today, any payment that was due between April 1st and July 15th, or any tax return, whether it's a fiscal year return or if your 2019 tax return as an individual was due on April 15th and you had a payment, you now have till July 15th. Earlier today, I got an article that there's considering possibly extending that to September, and the article even mentioned December. So, I wouldn't be surprised if that date moves to September or to October, to December, because I think the way the government sees it is, if you owe money and we let you defer it interest and penalty free for a couple of more months, we're just helping taxpayers financially get through, the pandemic and everything that's going on. So as of today, the returns are due July 15th. If there's no extension of that date for July 15th, you can file an extension come July 15th, and then file your return by October 15th if you're an individual.
Okay, thank you, Adrian. Danny, next question is for you. What changes, if any, should I consider for my personal finances?
So in times like this, it's very easy for us to kind of go back to the basics, right? So if you think about the financial crisis in 2008, 2009, from a lending perspective, Luke could probably attest to this. We went back to the basics in terms of lending, right? And one of the most basic parts of any financial plan is establishing an emergency reserve fund. And this is something that I'm sure many people don't have. And it's essentially 3 to 6 months of your household expenses set aside in a secure account, not invested in the market, not invested in real estate, not invested in a private company. It needs to be either in a money market fund or in a savings account. And it needs to be able to get you through 3 to 6 months of expenses. And I'm sure that in this time right now, there's a lot of people who are suffering because they don't have that. And we spent the majority of this first call talking about businesses that are suffering because they don't have that. And they have to tap into loans now to meet that liquidity. So by far and away, the biggest change that people should make is if you do not have an emergency reserve fund, you need to start working your way towards one immediately.
Okay, thank you, Danny. The next question, we have a question from one of our viewers. And Danny, it goes to you. It's from Nick Landera, class of 2002. How do you foresee the Fed's actions to affect inflation, income inequality, and overall economic conditions in the future?
Yeah, so the Fed acted right away and essentially dropped interest rates down to zero. There's been a lot of concern with inflation when we had interest rates drop to zero shortly after the financial crisis. It never really subsided after that. And the only thing that could make it subside after this is if we get a strong consumer. We are a consumer-driven economy. And so that is probably what's going to be what would drive inflation more than anything. And right now, I don't see it as an issue. And if inflation does become a problem, then the Fed will have to act in raising rates as well.
Okay. Danny, next question goes to you. Is this a good time to invest in the stock market?
So, a lot of people look at the stock market now and may be thinking, wow, what a great deal. I should start to put money into the market. I would answer this question depending on if you're one of 3 different people. Okay. So if you're a long-term investor, it's always a good time to get into the market, especially if you're going to be dollar cost averaging over a certain period of time. A long-term investor is anyone with a minimum of a 10-year time horizon. In other words, you can put the money away and you don't need to touch it for a minimum of 10 years. So if you fit that bill, yes, it's a good time to get into the market. If you're an intermediate term investor, if you need the money somewhere between 2 and 10 years, I think you need to be a little bit cautious, right? Yes, the market is down from its highs. We're down as of today, approximately 15% from the all-time high on the S&P 500. But we could experience some choppiness, particularly over the next several months. As I mentioned earlier, I'm very curious to see what second quarter earnings are like. We could very easily see significant volatility in the market come July and August. So if you are an intermediate term investor, if you need the money sometime between 2 and 10 years, I would certainly suggest that you be cautious, right? Don't be too aggressive with your investments. Maybe consider some bonds. If you're a short-term investor, you have no place in the stock market, not in today's market, not in yesterday's market, not in tomorrow's market. If you need the money anytime within the next 2 years, it needs to be in a secure investment, a CD, money market fund, something you can access with very little risk of principal.
Okay. And Danny, just to follow up on that one, if they're already in the stock market, should they, should they sell to prevent losses now, or should they keep the money in it? Are there any changes that they should make to their portfolio if they've already invested in the stock market?
Yeah. So historically, panic selling, when the market is significantly depressed, doesn't really work well for an investor. As human emotions take into account, as you see your portfolio dropping, it's human nature to say, you know what, I want to stop the bleeding. I need to sell everything now. And it's typically the wrong decision to make because you sell when things are at their worst. So if you are invested in the market, the best thing you can do is to hold tight. Make sure that your investments are allocated based on your long-term objectives. If you are allocated towards your long-term objectives, this is a good time to rebalance. Maybe some of your equities, your stocks are depressed in value. Maybe some of your bonds have appreciated. Maybe it's time to sell some of your bonds and rebalance into your stocks. But you got to make sure that your portfolio is allocated to meet your long-term goals and objectives. Definitely do not sell in a panic.
Okay. Next question, Danny, goes to you. It's from one of the audience from the Market Focus Group. The stock market has been on a roller coaster ride. While some sectors will be hurt for the foreseeable future, what sectors are you bullish about?
So typical sectors that do well in environments like this are consumer staples, right? People that sell soaps, toothpaste, toilet paper, right? Probably a good stock to own right now. Paper manufacturers and stuff like that. Utility companies tend to do well in times like this. These are more defensive sectors. So those are some things that you may want to consider.
Okay. Next question from one of our viewers too. Danny, goes to you, Gerald. To Danny, he says, you rock. He says, but what are you telling your market investors considering making timing plays with their investment? So much uncertainty. Hard to say that traditional fundamentals exist.
Yeah, so market timing is something that over a longer time period, really doesn't have much an effect on a portfolio. So if you try to invest today and the market drops 10%, yeah, you're not going to be happy about that. It's not going to feel great, but over the next 5, 10, 15 years, you're not going to remember that happened. So market timing is something that could be very dangerous because you have to be right on two different sides of the equation. You have to be right on when to get in, and you have to be right on when to get out. So if you can't handle the volatility, then perhaps maybe the stock market is not the best place for you to invest. But if you can't handle the volatility, you should just, again, have an investment objective that meets your long-term goals and stick to that objective. Don't make changes based on market-driven events. You make changes based on life-driven events.
Okay. Danny, next question to you too. Should I hold off on buying a house right now?
So interest rates are low. Mortgage rates in general are still very attractive, where they're not at the lowest that they've been due to demand issues. But it's still an attractive time to buy a house. So if you were planning on buying a house, the best advice I could give is if you feel secure about your job and your ability to pay that mortgage over time, absolutely, it's a good time to buy a house. If you feel that you may get furloughed or laid off, I don't know if now is a good time to step into a big commitment like a mortgage.
All right. Danny, the next question from one of the audience also goes to you from Jose Fernandez from the class of 1993. Jose Hernandez Saloon from the class of 1993. He goes, Danny, talk to us about the stock market. It's crazy how high it is given any and every historical marker. Move money to cash and wait? As a question, what is the new bottom going to be?
So if I knew when the new bottom was going to be, I don't think Columbus would need to raise more money for the building. So I don't know when the new bottom is going to be. It could be that we already hit it, but it could be that we go back and test it. That's what happens in normal markets. As I mentioned before, in terms of investing cash, it really depends on what your horizon is. I happen to know Jose. He's got a long-term time horizon. If he can handle the volatility, he should put money to work. But again, if you're someone with a shorter-term time horizon and you can't handle the volatility, you really don't belong in the stock market, especially not now. I certainly do expect volatility to continue throughout the remainder of the year.
Okay. Adrian, next question goes to you. Do I have to repay my stimulus check if my 2020 income is higher than it was in 2019? Also, is it taxable?
So no, it's not taxable. And the IRS clarified recently few weeks ago that if your situation is different in 2020 and you're not eligible for it, they're not going to reduce your refund or make you repay it. So the answer is no, you don't have to pay it back. Just like if you weren't eligible for it based on your 18 and 19 situation, but you are eligible for it in 2020 and you file a tax return, you will get the stimulus check in with your 2020 tax return.
Okay. Next question goes to Danny and Adrian. For the older alumni, should Lou, here we are talking about you and Doug Sawyer again. For the older alumni, should they file for Social Security even if they are still working?
So I've gotten that question from both Lou and Doug, Flash. So from a tax perspective, you got to look at how much you're earning, because for 2020, any earnings over, I believe the number is 18,840. For every $2 you make over that, they take $1 away from your Social Security benefit. So from a tax perspective, you really got to see what your earnings are and if it even makes sense. I'll let Danny discuss it from a financial standpoint and long-term planning.
From a financial standpoint, you need to do a break-even calculation. So if you're younger, if you're 62, 63, 64, and you're eligible to start taking benefits, you're going to be given a lower amount. The longer you wait, the more you are given in Social Security benefits. So, there's an easy break-even analysis you can do, because if you wait longer, then there's several years that you weren't collecting anything. So how long would it take you to make all that money up? It's going to vary from person to person depending on when they start taking their Social Security income. But definitely that break-even analysis is important, and you can do that with your financial advisor or your tax advisor.
Did we lose Flash?
Flash, you with us?
I think we lost the moderator.
Flash was gone in a flash.
I guess I'll jump in because I have the questions here. So Danny, the question is: it better to lease or buy a car at this time?
There's a lot of great deals out there for both. With the deals aside, leasing versus buying really depends on what type of a consumer you are. If you're someone that likes to have a new car every 3 to 4 years, then leasing is probably a better option. If you drive a lot of miles, leasing is probably a better option as well because of the wear and tear on the vehicle. But if you don't drive a lot and you tend to keep cars for a long period of time, certainly buying is a great option. Some of the things you can look for in today's market are 0% financing. There's financing terms that go out over 80 months with some car dealerships. And if some of you are in need of getting a car now and you're having some hardships, there is availability. Most dealerships are offering 90 days, no payment. So that's certainly another option that consumers should look at right now.
Okay. Danny, another question from our esteemed chairman, Mr. Doug Sawyer. What sectors do we now overweight and which do we get out of?
So as I mentioned before, the typical sectors that do well in difficult economies would be your consumer staples, also known as consumer durables, utility companies, companies that are known for paying solid dividends, typically the energy sector, but that's one that I would be careful with right now given political issues around the world. So those are two that you would look for right now. Typical sectors that don't do as well right now are consumer discretionaries, right? So maybe like we mentioned earlier, cars. Maybe not a lot of people are buying cars. Maybe not a lot of people are buying boats, or anything that is not a necessary household item. That space usually doesn't do well in times like this. Something else to look at is think a little bit outside of the box, right? So a lot more people are working from home. So technology is probably going to be a big benefactor of this pandemic. Maybe there's going to be more investment in technology so people can work more from home. So try to think a little bit outside the box from just the traditional asset classes that do well or do poorly in times like this.
Thank you, Danny. Next one, again, from Doug Sawyer. Lou, this is for you. Has a residential loan availability been impacted by the pandemic?
Doug, we are not a residential lender. We're exclusively a commercial bank, but having been in the business for many years, I do think it is slowing down. One of the things that we're seeing on the commercial side, which I think could bleed into the residential side, is about a month ago we started getting our first batches of appraisals with qualifiers on it. So the appraiser's coming in and he's giving you a value, but because of the pandemic, this value may change, in a few months. So it gives you a lot of uncertainty. I think what Danny said is really the way that a buyer should approach a purchase. If you feel confident about your job, your income, that there's nothing going to be surprising, then moving forward on an acquisition is probably something that you should do cautiously. But the interest rate market is not going to go up anytime soon. I think that we're going to probably see easily a year or two of very low rates. The Fed has come out and said it. So if you want to look at a market where you're going to be getting a great deal from a rate perspective, yes, this is it. I look more on the commercial side, and there's a lot of uncertainty on valuations right now. And if that bleeds into the residential side because of what could be a wave of foreclosures or bankruptcies, again, I think caution is the optimum word.
Thank you, Lou. And I think we got the last question, and this is going to Danny from M. Miranda 10. Do you agree that the market is prematurely pricing in a recovery too soon?
Time will tell, but it very well could be. Again, the market is very volatile lately. The pendulum usually tends to swing a little bit too far ever since 2008. And I think we swung a little too far on the downside, and it's very possible we swung a little too far on the bounce back. As I mentioned earlier in the call, I'm very curious to see what the second quarter earnings season is going to bring. And also, it's very dependent on whether or not we come up with a vaccine. Right now, it's estimated a vaccine won't be around until January, February of next year. If a vaccine comes sooner than that and the economy can open in full force, then I think you'll see the stock market react well before valuations justify it. So it's very possible we got ahead of ourselves, but time will tell.
Thank you, Danny. And I think that was the last question. With that, I want to thank everyone who's participated, all the panelists. I want to thank Flash, Melissa, Omar, everyone behind the scenes who made this possible. On behalf of Tom Krushak, our president, Dave Pugh, the principal, and all the Maris brothers, I want to thank you all for joining and participating tonight. I wish you all health and prosperity for what's coming ahead. And with that, we're going to close this out. Good night and adelante.
Good night.
Good night. Adelante, gentlemen. Thank you.